question that has come on the chat during the AGM. So this question's for you, Raj. It's from Mr. Amit Patel. He's asking why have we chosen to go in the automotive space? Why are our investments through OEMs and not auto ancillaries? And some of them clearly have the benefit of not being disrupted by the EV theme, but rather benefiting from that. So why not choose to play the automotive industry through the ancillaries?
So, firstly, we have one company in the ancillary space. We have Balakrishna Industries, which is a tire company. Secondly, the broad theme for investing in OEMs over ancillaries is that the valuations of OEMs are much more comfortable than the ancillary companies. Some of these ancillary companies have been trading at rich valuations for a long period of time, and also some of these ancillary companies are focused towards export markets. So given that we believe India is a structural story in terms of discretionary consumption, the growth in domestic auto industry would be much better than the export industry, and hence more investment towards the auto OEMs here.
Also, in terms of the pricing power and the strength in the value chain, I would think that the OEMs have more power in negotiation, or in they would capture a bigger share in the value chain. Obviously, there are exceptions. So a company like Bosch would be a one of its kind business and would have very superior characteristics. But a run of the mill ancillary company, which is one among many suppliers, typically will have a lower ROC numbers, or lower balance sheet strength, and things like that, as compared to the OEMs. So the larger OEMs, let's say Hero MotoCorp or Bajaj Auto or something, they have outsourced a lot of their manufacturing. They run a very asset light business model, plenty of free cash and all of that, whereas some of the non differentiated auto ancs really have very poor return numbers.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.